apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobus with great news about the Dow Jones Industrial Average. This iconic average of American economic activity of stock prices has been on a 45-degree ascent since about December 20th, right before Christmas, when the Europeans got their act together with the LTRO, the long-term refinancing option. And this right here, look at this move. 45 degrees up. We're going to Dow 13,000. It's not like we haven't been to 13,000 in the DJIA before. About 3 or 4 times in the past we have. But this is a very significant run because we've come out of the bottoms of August after the downgrade. Remember the S&P downgrade of U.S. debt? And the Dow has really marched higher. But there's been some things under the hood that have changed. The kind of stocks that are doing well in the Dow have really changed since last summer. Let's take a look. The top performing year-to-date stock in the Dow, Bank of America, up and astounding 44.2%. Hands down the best stock in the Dow this year. The Dow, mind you, is up about 6.3% year to date. BAC, 44.2%. In second place, Caterpillar with 28%, 21% for Alcoa and Microsoft, 15% for JP Morgan, United Technologies about 15% also. So these are your top 10 Dow performers. The second tier, you've got Disney at the top, 10.6%. Oh, these blue guys, by the way, those are the Dow, the dogs of the Dow. The 10 highest yielding Dow stocks at the end of last year. Now, in the next slide, we'll get to that, what's really going on there. Intel up 10%, still yields 3.15%. Oh, here we go. Who let the dogs out? A little Snoop Dogg there and dogs playing poker. Who let the dogs out? Ask Mitt Romney there on a campaign stop in Florida. Of course, that was one of his cultural reach-outs. But here we go. The third of the Dow that's been doing the worst of the 30, led by Kraft, AT&T, McDonald's, Travelers, Procter & Gamble, Johnson & Johnson, Coca-Cola, Walmart, Pfizer, and Verizon. What's significant there? Those were the stocks that were doing the best when the market was going to heck in a handbasket last summer and fall. Why? Because they have the big dividends that they pay out. They're stable companies making things like soft drinks and butter and cell phones and stuff like that. You can see Verizon, worst in the Dow year to date, down 5%, Pfizer down 2.8%. So there's been a change in market leadership. People wanted the steady eddies, the big dividend payers and such last fall. Now all you want is a little bit of action on the upside. You want action, you get into energy stocks. Look at West Texas Intermediate Crude. That's right, it's going higher. What are you a chartist? In any case, $109.82 West Texas Intermediate Crude. Saber rattling in Iran, of course, if the Strait of Hormuz closes, there goes 20% of the world's production of oil. Can't be shipped. So if there's a shooting war over there, things could get quite ugly. People are bidding up the prices, bidding up the odds of a shooting war. What do you do to protect yourself? Dig in. What do you do, huh? Buy DIG. This is the ProShares Ultra Oil and Gas, moves 2 times the index of oil and gas production, exploration and production companies. You can see the nice run it's had since October, and year to date from 45 to about 53. Decent little gain there in DIG. Another sector, you won't find any of these guys in the Dow Jones Industrial Average, but you would have in the days of yore, maybe United States Steel, things like that. But now we've got some steel companies, mini mills. Here's one out in Fort Wayne, Indiana called Steel Dynamics. The PE, 8 times earnings. Last quarter, it grew revenues at 21% on an annualized basis. Look at the stock. If you're a chartist, my gosh, here it is above the 50. Just below the 10-day average, above the 200-day average. Steel Dynamics climbing out of the bottom. Nucor also, the original mini mill down in Charlotte, North Carolina, 11 times earnings, revenue growing 25% last quarter. Look at the stock chart, nothing but strength right here, folks. Looking good. Get yourself some Nucor. So energy stocks, XLE, that might be fine too, but DIG gets you the ProShares Ultra Oil and Gas, which is what you want when oil is going up like it is now.